What if a change in US policy could trigger multiple growth opportunities for India? The proposed H1B visa is creating a ripple effect and growth opportunities in various sectors in the Indian stock market. Hi, this is Ganesh Komma. I'm a finance and a stock market coach. Today we are going to discuss about the H1B visa impact and what are the growth triggers which are emerging in India we will be discussing today. So let me share my screen and let's start the discussion on H1B saga, its effect on the Indian markets. Over 71% of the H1B applicants are Indians. Yes, 50% of India's IT BPM revenue, right? Information technology, business process management revenue is coming from the United States. And the proposed $1 lakh visa fee hike could reshape the entire sectors. So we will go deep dive. What are all the sectors that will be impacted and where do we see a lot of opportunities also we'll discuss in today's session. And first of all, yes, a quick disclaimer, a standard disclaimer. We are a SEBI registered entity, right? We are a SEBI registered research analyst. So any stocks or the sectors which we discuss are purely for educational purpose, right? Some of the stocks which I discuss in today's session, maybe I would be having certain positions there, or even I would have discussed with my inner community. So use them as case study. And this presentation, I've made it more live with various case studies also. So treat this as a learning concept and purely for educational purpose, and do not consider them as any buy, add, or a sell recommendation. So now coming to the disruption of whatever is happening because of this new proposed H1B visa, the current reality is over 270,000 skilled Indians applied for H1B visa just in the last year, 2024. And mostly that too in IT and technology services for US onsite roles. And this new impact, right, this new policy to a huge reduction in margins because it is going to shoot up around 20 to 50 times the current costs, right? And that too, large technology employers will have a big hit. Just a small math, 100 new visas itself will cost the company around $10 million extra cost, which is around 88.7 crore rupees, right? So this will cut margins, pass on the cost to the clients, and also restructure their deliveries also, right? So in the IT sector, if you see Indian IT index, let us go to trading view and Indian IT, right? I'll just load India Nifty IT index. And as you see the Nifty IT index, yes, IT index has been weak almost from December 2024, and this continuous downtrend has been visible. And even right now, also the index is slightly weak. And if you look at the relative strength, if you compare the relative strength of the IT index with the benchmark, which is Nifty 50 also, yes, IT index is looking very weak, right? And in my community, or even the way I follow my investment process, I never average down, right? And entering into a sector which is weak will not help us to compound money. Rather, what you can do, let's say during 2022, right? April, May, June, when we had the decline here, there is no point of adding while it is falling. Rather, wait for the uptrend to start. And once the uptrend starts, always average up, right? Always average up. So right now, Indian IT index wise, when the index is weak, when it is facing pressure, not the ideal time to do averaging down, right? To do averaging down. The IT sector wise has a kind of two scenarios. Scenario one, right? They hire Americans. In that scenario, the overall profit drops by around 7% and the profit margins shrink close to around 0.5%. And the American workers will cost around 10% more for them. And if you still see these changes will cost the companies, and the margins also will reduce a lot and the cost will spike up. On the other scenario, if they move offshore, right, even though there will be a slight dip in the sales, the overall profit increase than hiring Americans is better here because the profit margins are growing. And your offshore work rises from 80% to 82%, right? So there'll be a revenue mix wherein 52% will be offshore and 48% will be US based. And these offshore margins will stay as high as 24 to 25% versus US on-site at 10%. Looking at the global capacity centers, yes, the GCC is booming, and that is an opportunity for the Indian REITs also, real estate investment trust. So just a very recent news came from the Karnataka government, right? So the government Karnataka's global capacity center policy offers reimbursement towards rent, patent fee support, electricity duty waivers, and even on the commercial leasing, it hit around 50.9 million square foot in first 9 months of 2025, right? So there has been some drastical shift happening. And GCCs in India, if you see, it is generating over $64.6 billion revenue, employing 1.9 million people. And the projected growth rate is at around $100 billion revenue according to NASSCOM. And the GCC demand is also growing, and embassy office, parks, and all that are being benefited, right? And if you see here, office REITs, the real estate investment trust, we have like Embassy Office Parks, Mindspace Business Park, and even Brookfield Indian REIT. So the occupancy rose from around 80% to 90% in the last 18 months. And the operating lease rentals also has shot up by around 9%. And just to give you a comparison between India's REIT versus global REIT, India's real estate investment trust introduced somewhere around 2014, and we have around 5 listed REITs. And the share of the top 3 REITs in India is around 72%, and the average dividend yield is around 5.7% in India, right? So REITs can be an opportunity for you to diversify your overall investment, right? When you look at the asset diversification, like investing into equity, debt, fixed income investments, gold, silver, and REIT, real estate investment trust, can be one of the investment opportunity. And if you are going for a physical property, either the residential or the commercial, it should be on a higher ticket size. But in REITs, the advantage is you can purchase even with a smaller proportion of your investment amount as well, right? Investment amount. And looking at the further move in EMS space, which is electronic manufacturing product. Now, one sector or one theme which any one of you are not following is EMS scheme, right? EMS theme. If you have not been following the EMS theme, you are missing a big multi-bagger which is coming in the future. Because just in August 2025, if you see, $1.53 billion, right? Smartphone exports have been done. That is an increase of over 39% on a year-on-year basis. And the US exports doubled to $965 million. The mobile exports grew 127 times over a decade. Now just connecting this to the charts, right? Connecting this to the charts, if I look at EMS theme, electronic manufacturing services theme, companies like Dixon Technologies, right? Which is a beneficiary of EMS theme. And if I just look at the last 5 years journey of the stock, so I've just selected the time frame here as 5 years. And if you see, it has moved over 841.88%, right? From a price point of around 1800 levels, it has even reached the all-time high of 18,000. So this is the kind of a transformation which is happening in EMS theme. And now, if you just connect the H1B visa versus the other sectors, if you're just combining, yes, there are segments like on the consumption theme. So consumption, you have your consumer electronics theme, your retail consumption, even jewelry consumption, right? Even automobiles is a beneficiary of consumption. So the entire cream of India, right? The entire cream brains of India are staying in India, right? Rather than going offshore. There are a lot of emerging themes also coming up. It can be like EMS theme, electronic manufacturing services. It can be like a consumption theme, which is because of premiumization, right? Now, the lifestyle of individuals, they always aspire to grow. They always aspire to have a better life. So because of the premiumization concept, Consumption is one theme which will emerge for the next 18 months. And Indian government focus like PLI, Production Linked Incentive Scheme, from April to August 2025 itself, almost around 8 lakh crore production, 11,500 crores new investments has happened, and almost around 1.3 lakh direct jobs under LSEM it has happened. So this is the kind of an impact that is happening in a sector, and we as a stock market investor should focus. And even on the global investment, right? Tamil Nadu, yes, Foxconn investing around $1.5 billion in Tamil Nadu display plant, creating a 14,000 jobs. Karnataka campus targeting around 1 lakh iPhones per month by December. And you look at this EMS theme, like some of the stocks, if we explore, yes, Dixon fundamentally also growing at a very good rate. And even if you explore in Screener, so apart from the technical strength, to study a fundamentals about the company, Screener is a very good platform. And just to get an eagle eye view about a company on its fundamentals, a quick check what you can do is, how is it growing in terms of sales? TTM means trailing 12 months, 3 years, 5 years, and 10 years. Any company which is growing consistently for the last 3, 5, and 10 years in terms of sales, right? Yes, this company is growing at a very, very healthy growth rate. Profit growth for 3, 5, and 10 years, yes, it's very, very healthy. And even the return on equity, the final amount remaining for investors like you and me, right? Like the retail investors, both for 10, 5, 3 years has been decent, right? More than 20%. Stock price is something you have to see at the last, right? I focus heavily on whether it is growing in terms of sales, whether it is growing in terms of profit, whether it is growing in terms of ROE, return on equity. Apart from all these things, yes, you can also check whether it is overvalued, undervalued, look at the price to earning, compare it with the industry PE, and do not have this myth. A high PE company, not good to invest. No, don't have that myth. Rather, how you should connect is a high PE company. Let's say industry PE is X and the company's PE is higher than the industry PE. Go and check quarterly growth. Is the company growing at a faster pace? And is that growth rate substantial with its higher PE? Right? A company having a higher PE is not a problem until and unless it is growing at a very high rate in terms of its quarterly growth. If its sales, profit, and earnings per share, or even the margins are growing quarter on quarter or year on year, a higher PE stock is okay to invest, right? Is okay to invest. But a high PE stock with a negligible growth or a declining growth is a problem. Apart from Dixon, yes, you can also explore Syrma SGS technology, which is also growing at a good pace. And even from almost March 2025 also, the growth is good and it is in a clear uptrend, right? It is in a clear uptrend. So Syrma SGS, yes, you can track it in the basket of EMS, electronic manufacturing services. Even you have your Keynes technology, you can keep tracking it. And Keynes, yes, from February 2025, it has been clearly exhibiting a nice trend. And even if you see from December 2024, wherever it is during December 2024, now the stock is more or less trading in a similar zone, right? So December 2024, it's around 7,600. So right now it is about to break out, right? About to break out. And in the same space, yes, you can also track CG Power, which is also a proxy player, right? Which is also a proxy player coming up strongly into the semiconductor space, even into the AI, right? It's just coming up. Semiconductors or even the consumption theme should be definitely in our radar, right? Should be definitely in our radar. Now, H1B visa, yes, it creates little pressure in the Indian IT sector, Indian IT related companies, but that is one of the change which US policy had a change, and that is unlocking massive growth opportunities in India. And I would say this is creating a ripple effect in India, unlocking a lot of value, right? And it is building confidence to create value from India. So the real test is, are we ready to grab this opportunity or not? If you look at the premium consumption in India, it is rising like 1 crore plus homes, right? 62% of sales in top cities in the first half yearly of 2025. Apple shipments, like an increase of more than 29%, right? Hotel revenues have increased, right? Credit card spending over around 2 trillion rupees per month. Obviously, yes, because of the H1B visa, the fewer H1B workers could hurt remittance, specifically in states like Kerala and Andhra Pradesh. And the remittances, if you see, India has received around 120 to 129 billion dollars in terms of revenue of 23-24, and in which US itself has contributed 28%. Maybe on the remittance we may have a slight hit there, but on the consumption theme we are having a lot of opportunities, right? Lot of opportunities. So the best thing is when on the value chain, right, when you have work staying in India, which means the cream of the cream brains of India, instead of moving abroad, if they are staying in India, it creates new opportunities in many sectors, right? Will India move up the value chain or just stays cheaper is what the question is. And now, if you look at the concept of premiumization, consumption stocks, be it like Bajaj Finance, yes, they have a higher propensity to catch up. And even if you look at Bajaj Finance, yes, it has been in a sideways theme for a very long period, almost from September 2021 till around 2025 January. It has been flat, but from January onwards, we have been seeing a clear uptrend in Bajaj Finance, right? Specifically in the consumption theme. You look at jewelers, right? Titan Company Limited, which is into the jewelry space, right, is also about to break out at around 3,754 levels, is a very good resistance or a breakout zone, which we can see for Titan. If you see stocks like Zomato, or even now called as Eternal, right? It's just a name change, Zomato to Eternal, and even Zomato is also in a clear uptrend, right? Even stocks like Swiggy. So you have various pockets of strength emerging because of this small US policy change, right? And if you want to learn more about these sectors or stock specific analysis, I'm conducting a free webinar, and you can go through this link and you can register for the free masterclass where we discuss about how to identify stocks, how to identify the stronger themes, and how you can learn the basics of investing from the scratch. We discuss in that free masterclass. So you can go ahead and register for the free masterclass, right? And if you have loved this discussion and any sectors which you are focusing because of the premiumization or the consumption related theme, or because of the H1B visa policy shift, the proposal which has been done, what are the sectors which will be beneficiary and what are the stocks which you are tracking? Let me know below in the comments, right? And you wanted any other topic which I wanted to take up in the next session, let me know below which sector or which topic should I be covering. Thank you.